derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, we've got non-farms payroll coming up in about... Man, that's so weird. I changed the volume on my Spotify, but it didn't take effect until I changed it again. It's weird. Anyways, we got non-farms coming up here. So I'm not going to go like super deep into all the charts here first, but I do want to point out, you know, like yesterday we had a pretty big gap up in the treasuries, but like actually when you look at it, like the net change on the day compared to like the high of the previous day didn't actually end up being that huge. But now overnight, whoosh, now overnight it's huge. Big move overnight in the treasuries. I was looking at my portfolio yesterday because, you know, I was kind of like, is my TLT, how much is the TLT going to save me? Not much. It didn't save me much. I was still down 4% across the whole portfolio. But now we've seen a much bigger move in the treasuries. And I would say a pretty big move in the 30-year as well. That's another thing, is that because it's steepened, it didn't really help us. So, yeah, we're going to get the non-farms in this particularly interesting environment. Now, the non-farms this time doesn't look as interesting to me, to be honest with you. I'm kind of seeing something where like we're expecting 140K. I'm not getting anything that really gives me like, oh, I think it's going to be 100K or anything like that. But what I do see is that if it is below 100K, you're probably going to see a really big market flip out extension sort of a thing. Right. But for now, I don't think that that's a very real possibility. Most of the data and things that I'm seeing coming in kind of suggests that we should be fairly close to the estimates. So we'll see what happens. But I'm really watching that headline U.S. non-farms payroll number, 140K, and if it's below 100K, that's like a doomsday scenario. Treasuries, like now a recession is guaranteed, sort of a thing. Okay. Right now, you know, like the estimates kind of put us like just barely above a recession, but that's with traditional economic models. I kind of think that when you think of the economy as a dynamic thing, that there are some dynamics that are going to push us over the edge. All right, let's see how it goes. Okay, it's going down. It's a higher than expected 228. Okay, so that's very interesting. The knee-jerk reaction down, I think, is correct based on the number that we got, but the unemployment rate ticked up. We had a higher than expected payrolls, but unemployment rate went up for spot 2 versus an expected for spot 1. U.S. private payrolls was 209 versus 135K. Average earnings month over month, it was in line with expectations. So, it being good does kind of suggest short on the treasuries, but I don't really think it moves the needle. I don't really think it moves the needle. And so Perhaps that is why you are seeing the treasuries very quickly retracing that and maybe even heading up here. Well, I tell you what, the treasuries, or sorry, the equity indexes are awfully slippery at the moment. that is an account buster right there, man. Okay, well, so I was thinking maybe I could try and take a trade in this environment, but I don't think I've got one. So let's let them do their thing. I am kind of leaning towards maybe the flows from non-farms come through and peter out, and then we see some buying later in the session. There is some other stuff that we've got today, though, isn't there? We got Fed's Powell is speaking today. Barr and Waller. No sentiment survey this week or anything, though. Let's see here. Where? Well, on my calendar, it does not have... Oh, wait. Maybe I've just got it. Maybe I just don't have all of the event types added on. Ah, that's what it was. Okay. Fed Chairman Powell due to speak about the economic outlook at the Society for Advancing Business Editing and Writing annual conference in Arlington. Audience questions expected. Okay, so that is a potentially big... That would be kind of funny if what Fed Chairman Powell says today ends up moving the needle more than what the non-farms job numbers, let's say. I should also say I am a little shocked that it was 220 versus 140. I kind of thought, well, I would like to see it lower. The truth is, I want interest rates to come down. That's really the long and short of it. And so I would like to see it below 140, but I kind of thought, no, probably not. Maybe a little bit higher than that. But 228. That's way above what I thought it could be. So that is actually a shockingly good number. It's just, given the trade war stuff that's going on, it seems kind of like insignificant. I figured the government job losses would start to eke through headline numbers. I have been looking for that for sure. But I personally was not expecting to really see that in this jobs number, because we really haven't been seeing it that strongly in the initial jobless claims. Like we've definitely seen a spike in initial jobless claims in the DC area, but the kind of my understanding of it was that there hasn't been nearly as many jobs lost in DC as we all kind of thought, because of these judges standing in the way and saying those firings are illegal. So I think that impact might be quite delayed, and it might be a couple of months before those people are truly laid off. And you see the results of that in the non-farms number. Sell MBOs coming. Well, something just kind of shifted. I tell you what. Do see a little bit of a shift in the dollar along with this. Japanese yen got smacked down pretty hard by this. Well, I'm not too sure. Not too sure. Like, there was a little bit of a downward shift in cumulative delta, but it was quite limited. Let's make sure we have the robot on. Well, I'm gonna eat some oatmeal here. Let's just let them do their thing. You know, something that really bothers me when I'm reading around on social media. By the way, I really do believe that you as a trader should spend a reasonable amount of time reading social media. I think that you have to have the ability to disconnect yourself in what you believe from what is actually being said on social media. Because I think there is very much this effect of everybody just kind of settles into this group think, and especially on websites like Reddit, and that group think is almost always dead wrong, you know. But something that really bothers me that I'm seeing is how short-term focused a lot of people are. Like, here's this thread. Oh, for those people who voted for Donald Trump for the economy, how is your cognitive dissonance doing? Well, I personally did not vote for Donald Trump because of the economy, okay? But I really don't feel like a big market decline of 1 week. Even if that market decline is like completely justified based on what appears to be a complete own goal by the administration, is not necessarily like the end all of how we judge Donald Trump's economy. You know? The groupthink is usually people who want things to be worst case scenario. Yeah, it really is. Really, like there's a real tendency of social media to just be like absolute doomer mentality. And I think everybody kind of thinks that, oh, well, that's just kind of like our society, like millennials and everything are very kind of like doomer mentality. But I really think that it's the tendency of social media. I think that kind of content does better on social media because of psychological biases we have, you know? But I don't think that we should judge the economy based on 1 day's market losses, because what's likely to happen, in my opinion, is that this will probably become a self-reinforcing cycle. I think that interest rates will probably go down to zero, that we probably will go into a recession. I think it could potentially be a very deep recession, much further of a recession than I think any of the economists or the models are predicting right now. And then after that, there will be an unleashing of money to try and rebuild the U.S. manufacturing sector, but that will be slow going. That will be slow going, and so maybe we judge Donald Trump's economy even worse by the end of this than we do today. But maybe he brings enough manufacturing back to the United States and shifts the world trade and political order and everything that has a larger impact on the world than his economic success, you know? But I see this thing that's like, I saw this on TikTok. That it was I think it was like CNBC or someone like that. They're like, okay, let's go and see what people on the street think about the stock market's reaction to Donald Trump's tariffs. And like the first person says, the market doesn't lie. Oh yes, sir, it does. The market lies every day, and the market is wrong every day. And anybody that's really been intimately acquainted with the market knows that she is a crazy you-know-what. Okay. The market is wrong all the time. And you just really cannot take what the market says on any one day as indicative of where the larger economy is going. It is entirely possible. I don't think this is what's going to happen, but it's a very much within the realm of possibilities that we have like already hit the low. You know, that it's like, okay, well, we got the tariffs. Everybody's really unhappy about it. But then like retaliation is just kind of like meh. And everybody just deals with it. And then the market continues its rise. I don't think that that's what's going to happen, but it's possible, right? The bulk of manufacturing isn't coming back unless $250 an hour is a going rate for labor. Well, I think that the going rate for labor for manufacturing in the United States is going to be more like $0 an hour because you're going to pay robots to do it. This is something I think, another thing that I'm kind of like really about. I think that on the internet, you get a lot of fretting about robots taking over software engineering. And the reason that I think you see that isn't because software engineering is perfectly placed to be taken over by artificial intelligence, but because the most active people on the internet are software engineers, and they're scared about their jobs being taken away, especially since the past 2 years because of low interest rates, and probably corporations overreacting that the job market for software engineers really sucks. I think that if interest rates come down, that things will probably go back to the way that they were in software engineering, and we'll probably come back to we don't have enough people, and the market will swing back in favor of job applicants. But that might take a while. But I am not convinced that software engineering is better placed to take over AI as other places. Like, quite frankly, the robots that can walk around a factory and perform every task that a human can do in terms of their ability to manipulate the environment and to manipulate objects, that world is only 5 years away. 5 years away. And there's certainly some things that you're manufacturing that there is a lot of, like the person is not just performing a single action over and over again, right? They have to actually look at the object and make some determinations about it and these sorts of things. Okay. But AI, I think, is really close to the place of being able to do those things. So you just do reinforcement learning on it, right? You go through, somebody's manufacturing an item and you just see what they do to the item every time. And you train the model based on what the person does. And then you put the robot that's like a bipedal robot. Less than 5 years away. The robots already exist, and it is just a matter of them becoming cheap enough and being effectively deployed in factories. So, if we really do see a significant amount of investment in manufacturing in the United States, I think that there's a very high probability that a very good portion of that manufacturing will be robots. And I kind of think that, your job is more at risk if you work in a factory than it will be if you are a software engineer. Now, some trades, like going to somebody's house and fixing their plumbing or fixing their electricity, that is not something that I see AI taking over anytime soon. Not even just because, well, can a robot really diagnose an issue and fix it? That's kind of one of the problems where I see LLMs don't seem to do very well. Is like, when things break, but then they're not as great. But also because I don't really think that people will trust letting robots into their houses and stuff like that, it's just, nah, I don't think so. So probably plumbers and electricians, maybe an okay career trajectory, although it's not quite as amazing as some people put it up to be, right? But we will still, I think that there are still going to be some really critical paths where LLMs are not going to be able to write software. I think that the nature of the job for software engineer will change. But I think that actually the demand for software engineers is probably going to increase. And the amount of skill that you need to be a software engineer will probably increase. What do you think about the impact of artificial intelligence on financial markets? Will manual trading still be possible? Well, Claudio, we in financial markets have been living in the world where robots have completely taken over for a decade and a half now. Okay. After the 2008 financial crisis, markets almost completely switched to robots for market making and execution. So that already happened. But you can kind of see, perhaps, I think that the way that automation went in the financial industry is probably going to be a fairly decent analog for how it happens across other industries, right? Because I think that the big thing that the robots do not have that the humans do is agency, right? So yeah, a robot might be able to come in and analyze the market and say, well, we recommend that you do this, that you go long this asset or you invest in this way or whatever the deal is, right? But ultimately, a human, it can only do so because a human has made a decision somewhere. Either the human has made the decision to follow that recommendation, or the human has made the decision to give a robot discretion over a portfolio, right? And so that is basically the way that the financial markets work now, right? Is that the jobs in the trading world are the jobs where you're like making the decisions and not necessarily just straight executing, right? The job that we would typically do in the markets, and part of the reason why trading is so hard, is because the robots have basically taken that over. I think one of the funny things about this, well, people will say, well, yeah, that we've had robots, doing market making and mechanical strategies for a really, really long time. But the thing that has changed in the past 4 years, or however long it's been now, is the introduction of large language models. Yeah, even on that, Wall Street has been using that stuff for a long time. Okay, before they used large language models to make chatbots, they were using large language models to interpret what people were saying on Twitter and using that as a indicator of sentiment and making trades based off of that. So, the introduction of ChatGPT, I don't think really changes the financial world all that much, because it was a change that had already happened decades earlier. And you can kind of see, like, do you get to this point where it's like the market just runs on its own and all of the robots do everything? No, it doesn't turn out that way, because humans are still there in our agents and act. Here's an interesting thread. Change my view. Trump was unironically right about NATO needing to rearm itself and be more independent militarily. You know what I think is kind of funny is that most of the things that Donald Trump wants to accomplish are not actually that controversial. In my estimation, wanting to revitalize the manufacturing base in the United States is something that like every politician has run on for the last 30 years. Okay. Saying that NATO needs to be more independent is something that like every politician has run on for the past 30 years. Okay. The difference is how Donald Trump thinks that you can accomplish that goal. That's the thing that's controversial. Chew on that one for a bit. Apparently, Donald Trump just tweeted about the jobs number. That it was better than expected. It's kind of funny because I think that we're still in the place where I don't really think that the job numbers have very much to do with anything Donald Trump is doing. He says it's already working and we can't lose. Okay. Oh. Why is nobody talking about oil? Okay, well, let's go and look at oil. And we look at oil, change it over here. Yeah, I didn't go through all the charts. Maybe we can just go through the charts, right? Here you got the treasuries. Treasuries, huge move up overnight. They are retracing a little bit. Still a lot of steepening, which means that the 5 and the 2 and the 5 are going a lot further than the 10 is. Or than the 30-year is, rather. So my TLT is probably not making up for the losses very well. So it's probably a drop in the bucket. I think my TLT was up like 0.5% yesterday versus, everything being down 5%. Actually, banks were down like 8 to 10%. That hurt because I'm in banks. S&P 500, okay, the decline, but a little bit of a retracement since the news. Okay, oil. Okay, yesterday we had a pretty big move down. Today we have extended that move significantly. You look at the chart, that's a pretty ugly move, right? Okay, but check this out. It's still within the range that it's been in for the past year. Okay, so now, of course, if it drops out of that and it starts getting below like 55, then we got something more significant, right? And I think that I could certainly see people making the bet that it's going to. I don't know. Kind of depends on the ES. I still kind of think, well, let's come back to a daily chart on the ES. I kind of think that we could come all the way down to this 20% retracement, if not much further than that in the longer run. Because when we were looking at like what would be the impact of GDP of tariffs, what would be the impact from tariffs on GDP? And it was like, oh, well, we're at like 2-3% right now, and this is like a 1.2% decline on it or something like that, right? Well, except for that, the tariffs ended up being twice what they were expecting. So that kind of gets us to, okay, GDP might be like 0.3 or something like that, right? But that doesn't take into account things like reflexivity, retaliation, tariffs, all of that sort of a thing. So, like, here's the thing. We're not even to a 10% decline in the S&P 500. If we go into a recession, they will probably decline something more like 40 to 50%. Okay, so this market hasn't come anywhere even close to pricing a recession yet. And neither has oil. So just keep that in mind, okay? Okay. Well, I guess I kind of am predicting a recession, aren't I? I don't know. When I look at it in that perspective, I think that it's still a little hasty to predict a recession, but I do think that the tariffs that were announced this week and the way that the administration did it was extremely damaging to markets. Okay. Gold, since the tariffs have been released, have been kind of a little bit wonky. There have definitely been some strong rallies and some things that kind of suggest to me that people are trying to take refuge in gold, but it's definitely mixed. Okay. Silver as a risk asset has been going down. Copper really taking some hits here. So I think what you're kind of seeing here is like Asian and European traders now kind of reacting to, well, maybe we'll have a recession. Like demand for these commodities are coming down big. Hence you see oil and copper following each other pretty closely. And we got the Japanese yen. Well, since the tariffs, the Japanese yen has been following a little bit of a range here. So, and of course the dollar again declined big. And the Bitcoin took some big hits here, but it is still within its range. And it's actually the amount of volatility. Like when you look at that move and you compare it to some of the other stuff that we've seen in Bitcoin lately, Bitcoin is actually underreacting to this stuff. Makes perfect sense, right? Because everything is good for Bitcoin. Doesn't matter what happens to Bitcoin, people like it. So Bitcoin just does not react in a sensible manner. Let's see here. I missed this comment from Uzi. Now all the normies who can't budget their paychecks, let alone manage an equity portfolio, suddenly know everything is Great Depression crashing. Well, so one thing I do want to point out, and I'm not saying that this is what you were trying to say, but it is something that I am seeing people on TikTok say, is like, well, last time that we had tariffs, because this is a bigger increase in tariffs than Smoot-Hawley tariffs, right? And Smoot-Hawley was very much instrumental in creating the collapse that led to the Great Depression. But let's just remember that they did not create the Great Depression. They maybe created a recession, but what created the Great Depression was after we got into a recession, the Federal Reserve refused to cut interest rates. And if we get into a situation where we have a recession and the Federal Reserve refuses to cut rates because of fears about inflation from tariffs and things like that, then all of a sudden we are exactly in the situation that created the Great Depression. But that's the thing. Federal Reserve understands this, and in that situation, they will prioritize employment. So they will cut interest rates. So we probably won't get a depression. And let's just say, like right now, I think some models are saying like probability of a recession like 53% now or something like that. I do think that a recession is becoming very likely. I don't know if I'm willing to like stake out I'm predicting a recession, but I do think it's likely. And I am not the kind of person that's like always predicting a recession. I'm always seeing things in the economy that kind of concerns me, but I'm actually very much been the, yeah, it'll be fine. And buy the dip. It's amazing how quick the Fed was to raise interest rates, but how careful. Well, I don't know if I agree with that one, Uzi. Because don't you remember all of the discussions at the time that were like, you know, the Federal Reserve should have started raising interest rates like 6 months ago? Right? What happened was the Fed was late. They put off raising interest rates because they were concerned that there was going to be another leg of coronavirus. And what happened was two things. One was that kind of turned out that next leg ended up not being a big deal. And two was they kind of realized that there was likely to be more inflation from that coronavirus rather than deflation. Okay, so then once they realized that, which they were way too late about doing it. They really were. I can understand why they made that decision. At the time, I was kind of like, well, because I think everybody's always trying to be like conspiratorial, like, why is the Federal Reserve, they're doing this or that to screw us over and yada yada. No, I think that they were just concerned about Omicron and they were wrong. So, like, I think that they're, you know, like one of the, because I remember arguing about this a lot at that time. And the point that I was trying to make was, like, all we care about is predicting what the Federal Reserve is going to do, right? And their logic makes sense. Their case makes sense. They're going to go through with it, and they did. It was a policy mistake. In retrospect, we can absolutely say that it was a policy mistake. And I wasn't trying to say at the time that I didn't think that they were going to make a policy mistake, only that they were going to hold off. And because they held off, then they had to raise interest rates very, very quickly. You know? But. Back in September or October, was it? I forget what month it was. The Federal Reserve cut interest rates by 50 basis points. And I'm kind of sitting here like, I just don't understand how you go from cutting 50 basis points to no cuts at all. Just like that. It makes absolutely no sense to me. I am just like, all of the sudden, what the Federal Reserve is doing on a longer time frame kind of doesn't make sense to me. So this kind of narrative that, well, maybe the Federal Reserve, because of their institutional biases and so forth, aren't being as nice to Donald Trump as they probably should be. Maybe if they had, if the Democrats had won, they would be cutting interest rates more. And yeah, maybe part of it is because of concerns about tariffs and everything, right? But I really think at this point, you kind of have to sit down and wonder, tariffs are probably more of a deflationary factor than an inflationary factor at this point, right? Like if you have tariffs and it increases the cost of some goods, there's going to be price inflation, or rather increases in prices across certain goods. That's probably going to come at the expense of demand in other goods. So you're not necessarily, like, if we increase, I think one of the mistakes people make is like, okay, tariffs were just added 20%. That means that inflation is going to go to 20%, right? No. Because first of all, the tariff is placed on like the cost to make the good, right? So like if you're importing something over and it costs you like $100 to make, then they're charging you 20% on that $100. But if you're turning around and selling it for $200, right? They're not saying, oh, okay, you sell it for $200, now we tack 20% tariff on top of that, right? So you're not including that margin. So when you do all of the math and all of these sorts of things on like how it tends to go, it actually tends to be the end price increase for the consumer is about half of what the tariff is. Okay. So that means they're increasing the tariffs 20%. That means that the costs of those goods that you're getting from overseas, you should expect to increase in price about 10%. Okay. But again, that's not the whole economy. That's only about like 55. I don't remember the numbers. But I don't think that it's only like half the goods. Okay. It's like half the goods. And the increase in prices from those goods, it kind of comes, it pulls demand from other goods, or it just reduces demands for those particular things. And so when you look at inflation, how much inflation does it actually, like a 10% increase in those goods? How much inflation does that make? It's kind of a little bit fuzzy, but in some cases, it just kind of all comes out even, and it doesn't increase inflation overall. Like, that's basically what happened last time with the last trade war, was there was not a meaningful increase in inflation. You look at the CPIs and everything, it wasn't. I mean, the CPIs increased a little bit, but they just continued to be along the, the spot 2, spot 3% that is supposed to be every month. Okay? But if the tariffs are so disruptive that it creates a recession, then the tariffs actually become a deflationary force, and you will see prices overall decline, mostly because of the stock market overall declining and people just not being able to buy anything. Okay, so and the Federal Reserve in their last meetings basically said that. They basically said that. There was like, it doesn't make any sense to, we're going to have 10% increase in the cost of imported goods, so we need to raise interest rates to fight that. No, because it's like a one-time thing that's going to increase prices regardless of whether you keep interest rates high or not. And so all you're doing is extending the pain from it. You're not actually doing anything to prevent inflation or anything like that. So maybe you hold interest rates where they are, but I keep seeing some people that are like, oh, like interest rates are going to go up now, right? No, probably not. And honestly, it does seem to me that this whole thing is what is the word? Crafted to give us lower interest rates. Like when you look at some of the things that Trump's economic team and the papers that they've written and things like that kind of suggests that the administration thinks that their actions will overall result in lower interest rates. And quite quickly, too. Now, that brings me to this other topic of discussion that we have to talk about, and that is the Trump administration just trying to wreck the economy to get lower interest rates? And I don't think that makes sense. I don't think that the administration's primary goal is to refinance the debt at lower interest rates. I think that is kind of a side effect that they expect from their larger policy goals. Their larger policy goal is to revitalize the American manufacturing sector. Listen, guys, in a world of AI, where an AI can think as much as a human, and AIs are better at thinking than us in every way, then the only truly valuable thing in the world left at that point is physical things, right? The people that will have all of the money and will be making money will be the ones that are like making raw materials, getting raw materials and making things out of them. And those are going to be the things that are going to cost stuff. And like service labor will be worth nothing. Okay. So if our economy is based entirely on services, and it's about to get replaced by AI. I'm not saying that it will. I kind of don't think that it will, but, you know, just for the sake of argument, we go down this scenario, okay? It's super, super dumb to let China do all of that manufacturing, isn't it? It really, really is. If you allow the current situation to continue, you're basically giving the future of the world to China. And that's not a world that I want to live in. So I think that Donald Trump is absolutely right to be concerned about competition from China and to protect domestic manufacturing from China so that we can revitalize manufacturing in the United States. Okay? And like I said, this is something that like every politician for the last 30 years has kind of been saying anyways. So like we need to have manufacturing. This is a national security issue. Like it's been a problem. The reason that Americans are kind of so uppity about it is because they've been told this for like 30 years and nobody's doing anything about it. And Donald Trump finally came in and said, well, I know how to do about it. I'm going to use tariffs. Well, okay, tariffs are controversial, but that's the whole thing, right? That's his goal. That's his goal, is to revitalize the American manufacturing sector. Part of what you have to be able to do that is you have to have interest rates at least lower than they are now. Because with the interest rates right now, you just cannot invest in businesses. Like you go into the startup world, hardly any startups being created. I mean, like if you have a really, really good business that's already running and everything, and like the capital is there, but like the startup world, there's not a lot of startups being created right now. Okay. I would really like to create a trading platform. I would like to make a startup building a trading platform. I think that I can make a better platform than the platforms that exist out there today. It's kind of a tough sell anyways to make a startup because there's high risk to it. And with the interest rates that we have right now, it's practically impossible. It's practically impossible. So how are you going to rebuild the American manufacturing sector? You know that there's these things where like, okay, like some of the steel manufacturing and things like that requires immense amounts of electricity. Okay. Like you have these situations in China where it's like they have a whole power plant just for the steel plants. Okay. Because you have to use the electricity to heat things up and do all of these different processes and things like that. So like there is infrastructure. We can't just go and build a factory like that today, right? Like we have to, there's all this infrastructure and everything that we have to put in place. And then like, how do you ship those really big, huge things around and things like that, right? Like there's just a lot of infrastructure that you need for the kind of manufacturing that we're talking about that the United States doesn't have anymore. So that's going to require a lot of investment. You're going to need lower interest rates. You will, or you know, you can't have restrictive interest rates. At least they need to be at least neutral. So yes, lower interest rates are explicitly a kind of a linchpin in the administration's strategy, right? But what I see everybody saying, oh, well, Donald Trump is just doing this because he wants to crash the markets. And I don't think that that's really the case. Like what would the difference be? Like either way, interest rates are coming down, right? Either way, interest rates are coming down, I think. I think that the difference would be, well, if Donald Trump is just putting these tariffs on and everything to wreck the economy, then once the economy is wrecked, then probably he takes them off so that the economy can recover again and he can make all of his money off of it, right? But I don't think that's what's going to happen. I think that he is going to keep at least 10% tariff on all imported goods until he is taken out of office. And when the next person comes in, they're likely to keep that on at least temporarily and maybe as a bridge to something else, but they're probably not going to just get rid of it. Okay. So if you're investing, like you're seeing a crash here, and then after the crash, When we're like truly confirmed in a recession and everything else, and the stock market is like a 50% retracement, and you're thinking, okay, now I should invest based on tariffs being replaced and the world order going back to what it was, I think you can have a bad time. Now, the irony is, if you invest the opposite, you invest that the tariffs are going to stick around and I am going to invest in domestic manufacturing, that's probably going to be a rough road. Making that stuff's not easy, man. I think that America has a really rough road ahead of us. So I have this thought in my head that like it's like an intrusive thought, like it just keeps coming back. I don't know why I'm thinking about it so much today, but like I just can't stop thinking about it, and it just keeps coming back to me over and over again. So I'm going to talk about this, and I wouldn't say that it's necessarily directly relevant to what I was just talking about, but I keep seeing it. Okay. Dune. Okay, the book, movie, Dune. There's a part of that story that has always kind of not made sense. Okay, just within the certain context, it doesn't make sense. Okay, I think we can fix it, but within a certain context, it doesn't really make sense. Okay, so like, what is the story in Dune? There is a galactic empire, and that galactic empire rules over multiple houses that are kind of like countries. And this emperor just one day randomly decides that he is going to screw over one of the great houses. So he gives them Dune. He gives them the rights to mine in Dune, and they take it over. And then after taking over, they are vulnerable, and the house that owned Dune before comes in and kills them all. So the emperor basically betrayed the Atreides house. And like, why did he do it? He says in the third movie, or sorry, in the second movie. So because your father was a man of the heart, and he was weak, so we had to get rid of him, right? Doesn't that just all seem kind of like a little bit weird? Like you set up this big elaborate thing to eliminate one house, and why? Because you thought that they were weak or something? Like, couldn't you have just like not done anything? Couldn't you have just like not done anything and probably made more money and everything? Like, it doesn't really make sense. Maybe it was because his wife was Harkonnen, and convinced him to do it because to benefit the Harkonnens. Maybe there was some favoritism at play there, but like it just there's something about it that just doesn't seem congruent to me. You know what I mean? Like, and it's like maybe it's kind of something about that universe overall is like the way that the Harkonnens behave and everything just is so depraved, and they are so brutal and ugly and everything. It's like, is that just so that we have a grim, dark future? What's with that? It doesn't completely make sense to me. But when a story really resonates with me, one of the things that always kind of comes to my mind is, there must have been something that actually happened. I think that some of the best stories are kind of recountings of experiences that people actually had. Like, my understanding is that that's definitely the case with Lord of the Rings, and that a lot of Lord of the Rings is kind of, what he experienced during World War I. So like, what is the thing that happened that is the motivation for Dune? Or that, that they were drawing, that Herbert was drawing from his experience to make Dune? Where was this case where like you have one nation they're given control over an area of land and then they're immediately killed. And like, it just doesn't, does that happen in history? Is that something that happened in the Middle East that I'm not aware of? Like, it's just it still just doesn't make sense. Okay, well, let's shift our reference a little bit. The great houses in Dune are not countries. They are corporations. All of the sudden, everything in Dune doesn't just make sense. It's like, it's prescient. It's like, that is the world that we live in. Right? So the emperor is the United States government, and the great houses are corporations. Will the United States government do something like that? Come in and give one company control of something and then give it over to another company and then kind of let that company fail and then turn around and give it back to the other one? That's exactly the kind of shit that happens in government, man. That's exactly the kind of stuff that happens in our world. Yeah, okay, we don't kill people, but like, if you just consider firing somebody kind of equal to death in the corporate world, okay, yeah, the people are the corporate world is super brutal like that. You come in and whoever is not doing things correctly, we're gonna or we're unhappy with what happened, we're gonna fire them. Yeah, I'm gonna fire one guy. You know, the whole thing with the Harkonnens, the one guy that was in charge wasn't doing a good enough job of eradicating the Fremens, so they replace him with somebody even more brutal. Right? That happens in the corporate world. Absolutely. Okay, the current CEO is not doing a very good job. We're going to replace him with a new CEO. Dune is about corporate politics, not government politics. Why do you have to destroy House Atreides? It's like, if you have a corporation and everything is about who's the most brutal, cold, let's make money corporation, and then you have some corporation out here that's actually being nice to people, and they're making money from being nice to people, that's a threat to the whole order. We got to get rid of them. Now the motivation to destroy House Atreides actually makes sense, doesn't it? I gotta think of it, because one of the things, I think the thing that got me thinking about this is there's a lot of discussion about the labor market is very, very difficult right now. And those of us that are unemployed, I'm unemployed, are having a very difficult time finding employment. And the average job search is 7 months right now. Okay? Like, the average. That's kind of crazy, because I don't know if there's any state that has unemployment that goes more than 6 months. Maybe there is. I bet you there probably is some liberal state. Because if in Utah it's 6 months, if Utah is 6 months, then there's got to be other places where it's longer. Okay, but for me, it's 6 months. The average job search is longer than the unemployment, like the average unemployment search. And if you're unemployed, it seems so much harder to get a job, right? Hiring managers and recruiters kind of have this idea that they would much rather take somebody that already has a job. That if they've been unemployed, that they are high risk. Because one, why did they get fired in the first place? They must be one of the weaker employees if they got fired. And then they haven't been in the workforce, so their skills haven't been kept up, and they're not going to be as much in the, you know, the kind of the flow of the corporate world, and they're going to have to get back into that, and so they might not perform as well, and so people that are unemployed have a harder time finding a new job than people that already have a job. But I think that is an incredibly short-sighted way of approaching hiring, especially in the current environment. Because one, in the tech world, it's something like 30% I've seen, where like 30% of tech workers have been disrupted in some way. Okay, like while the unemployment rate for the United States is very, very low overall, 4.2% is very low historically speaking. Okay, but for that one industry, which is only like 5% of jobs, for that one industry, it's a complete disaster, and it's been like that for like 2 years. Okay, and it's kind of like the white collar workers overall. So like 5 to 10% of the workers. So when those guys are all unemployed, okay, it only comes up to like 2% of the economy. That's kind of crazy. Is like, if we had lower interest rates, could we have the unemployment rate be as low as 2%? I kind of think so, maybe. But here's the thing. Those people that are looking for jobs, I really think that people underestimate what they have to go through to get a job. Like some of these places, it's like you have the recruiter screening, you're going to have a meeting with the hiring manager, and then they're going to want to have some sort of a code review or a coding session. And then there's going to be like a design interview, and then there's going to be an interview with the team, and maybe multiple panels, and then an executive review. And like some of these places, it's like getting to 6, 7, 8 rounds of interviews. It's absolutely crazy. And the amount of like preparation and everything that you have to do for those kinds of things is crazy. Like leak code, you can just, spend all day, every day grinding leak code problems. And like some companies are asking leak code hard questions to be able to filter down the number of candidates that they get. Trying to get a job right now is harder than having a job. It's more work than having a job. You're practicing all of these things. Like, you have to know a technology completely inside and out. And meanwhile, the person that actually has the job just asks ChatGPT. Like it's really crazy. I think that I would, in many respects, rather have the new graduate that's been living through this nightmare for a year or however long than somebody that's already in the workforce. It's like the people living on Caladan right now should not underestimate how hard it is to live on Arrakis, because the Fremen aren't pushovers. That's what's happening is all of these people that are unemployed, they've been living out in the desert. It's hard. And they are being forced to level up excessively. And so it is probably the case that your average job seeker is higher level in skills than your average person already in a job, simply because the job seekers are forced to level up in order to try and get a job. I think, like, if you're like somebody on a team already and you're like doing a team interview or whatever, I think a lot of those people are very intimidated. They look at the candidates and they're going to see, you know what, this candidate is going to be way more competitive than me. So if somebody's going to get a promotion, it's going to be them, not me. That's probably what they should be concerned about. If I was a company, I would be more concerned about not hiring that guy and that person going and working for somebody else. Because I really think that a lot of these candidates in the job markets have very, very strong technical skills. Simply because they have to like grind leak code and do system reviews all day and stuff. And then on top of that, you're talking about people that have a great deal of experience anyways. Let's see here. What are you talking about here, Paul? Imagine living in a small town with barely a handful of businesses around. There just isn't jobs here, and I am trying hard to get just barely enough, a couple thousand probably, to leave. And the only job I could get after months and months of trying, with labor skills even, but not even in the same field anymore, is a part-time job. That's I don't just seem like a bitch for complaining about no work. It makes it seem lazy. Makes me seem lazy. I don't like it, but I couldn't even work at Walmart or McDonald's if I begged and begged and begged. Yeah. Everybody that I'm seeing online is saying that like, not only can they not get hired at like McDonald's or Target, that people were talking about Target. They're like talking about how hard it is to get hired at Target. But they were all saying that they get auto rejected, that humans aren't even seeing it, that there's something about the way that their ATS system works that like it automatically rejects you if you have any experience. I also think that one of another factor that people are ignoring is that there is a very strong shift to back to office. And so that kind of limits the number of practical job opportunities. So for me, the jobs were all in Salt Lake. The jobs were all in Salt Lake. And for me, that's like a 20-minute drive, and that's fine, right? But what's happening now is it's mostly the financial companies that are downtown Salt Lake, and the majority of the tech companies are all the way down in the Provo Valley, and that's 40 minutes away from me. So this is kind of why I've been getting like super agitated and unhappy about the way that the YouTube channel is going, because there's a very high probability that when I get a new job that we will not be able to do the stream anymore. Because if I have to travel 40 minutes or an hour, I have to leave an hour before work, right? And they want to start at 8 o'clock in the morning, then doing the stream just doesn't make sense at all. I would have to leave at 7 o'clock. So I would only be able to stream for 30 minutes. And I've done absolutely everything that I can think of to try and get the YouTube channel to take off so that we don't have to do that. And I am all out of ideas. We have I have prepared a seminar series. So if you know anybody that's a beginning trader that could benefit from a seminar series like that, or sorry, like a workshop like that, send them my way. We can get like 3 to 5 people like that, then maybe we can go that route. But so far I'm not seeing anybody raise their hand, and I don't really think that that's a viable path either. So we may just be in the kind of like the inevitable, it could be a couple more months before I get hired in this economy, especially with the tariffs and everything. It might be a really rough road. But yeah, it sucks. I have trouble finding a job because I showed them a website I built, which is called localhost 3000, but I got a rejection and I don't know why. Octavius says Nike is toasty. Yes. Yes, they are. Oh, man. So Nike invested very heavily in some Asian countries. I forget which one. And because of the Nike, that country ends up having an absolutely massive trade imbalance. And so they're getting hit with an absolutely massive tariff. And so the cost for Nike goods is just like, like we were talking about 20% tariff, right? Well, that's like across the board. But for Nike products, I think it was like 40% tariff. Something like that. So Nike's stock has been gotten hammered. But you know what? Given all of the things that Nike has done and everything, I don't really feel bad for them. I don't really. I used to really like Nike stuff. Like, I was, you know, for an actual sport, like it was quality stuff. But like what happened was, one, the quality went down, and then two, they started doing all this dumb stuff. Like, one of the things that really irked me, it wasn't just like, oh, we're gonna support black athletes more or wokeness or things like that. It was like, if you were a female athlete and you got pregnant, you were screwed. So Nike has a system set up that basically explicitly punishes women that have children. That's not cool. So screw them. They don't even make shoes for humans to wear. Humans should not wear them. I don't know. Are you on the whole barefoot thing? I think you can get on this. So your normal shoes have a high heel. I think that part of that is because people want to be taller, so you have a high heel so that you look taller. But another part of it is just like the padding. And if you have the padding on the shoe to kind of pad so that you can hit, when you're running, you can strike the ground with your heel, people generally do run faster. But it's less injury prone if you strike with the front of your foot. But then the problem is that because we've all worn shoes our entire lives, our bodies aren't really strong enough to do that, to run like that. And that is why there was a bunch of companies like Vibram that they were making shoes that were kind of like barefoot shoes and were shaped to the actual shape of your foot and didn't have a rise in the heel. And you would strike with the front of your foot. And they said, well, it's less injury prone. And they go and they do a study. And the study finds that they are not. They actually get more injuries. People using those shoes actually get more injuries. And so everybody said, oh, the whole thing is a crock. But I think that people are misinterpreting the study, because if you've lived your whole life striking on the heel, then yeah, trying to switch over, you're going to be more injury prone because you're weaker in that way. Doesn't mean that heel striking is better. And that's probably what you were saying about they don't even make shoes for humans to wear. It's also in the toe box, yeah, because it kind of pushes your toes together on top of each other like this, and then your toes can't kind of splay out and grab the ground. I prefer shoes with the big toe box. I've been going, so my shoes, I've got like a pair of New Balance shoes that are kind of like, I wouldn't say that it's excessive, but it has a larger toe box and no zero drop, no cushioning in the heel. I was into all that stuff. That's why. That's what I'm really saying. And I still kind of will like to go walking barefoot. But I would rather do the sandals. I always wanted to get the sandals and I never did. Tell you what, the treasuries have been relatively tight for an on-farms Friday, haven't they? S&P 500, well, first 15 minutes have been a sell. Oh, I didn't see this. China retaliates with 34% tariffs on all U.S. products. I really don't think that is going to help China. You know, one of the things that I see something that I think is really maybe it's just people being short-sighted, but like let's use the Canada example. Okay, so the United States is going to start a trade war with Canada. So what does Canada do? Oh, well, we'll shut off your power. I really don't think that, or the other thing is, we're going to punish the most Republican states. That's another one that they do. I think that this strategy makes zero sense. Like, all you're going to do is piss regular people off. Not going to change the tariff. It's not going to change what Donald Trump does. You're just going to make people hate Canada. And it's the same here with China. Okay, so now we're going to put big tariffs on the United States and hurt certain United States industries that are trying to export to China. Well, I really don't think that people are going to like come to the next election and be like, well, because China put these big tariffs on us, I really like those guys. And I really want this all to shift so that, you know, we can be nice to China, you know, like, no, it's not. They're just going to be vindictive back. They're just going to be like, well, screw China. Like we have disconnected a lot of our trade from China. I don't want to reconnect now. So I kind of think that retaliation works against you. Like if a country wants to protect their own domestic industry, then okay, retaliatory tariffs that are kind of equal in size or whatever, like, makes sense, but then like going beyond that I think is dumb. If tariffs are bad, then why are retaliatory tariffs good? Doesn't make any sense. Well, or let's not say retaliatory tariffs, because I do kind of think that like keeping it even is a good idea. Like if they're protecting their industries, you should protect your industries. Because them putting on a tariff and you doing nothing, that's probably stupid. That's kind of what the United States did and has gotten us into this issue. Okay, but like going beyond that and like, you know, trying to punish the other country. Oh, we're not just going to put on our own tariffs to protect ourselves. No, we're going to try and punish you. You're doing the same thing that you claim is bad for everybody. Nike quality has been going down for some time now. Apparently, so I have Nike Romalos too. I've basically used them every weightlifting session since I started weightlifting, and I've been doing it for more than 10 years now. So I've been doing it for a long time. And those shoes are still just almost perfect. Every once in a while, I will take like a magic eraser and clean them up because they're yellow and you see all the scuffs. They kind of look dirty. But you just do that and replace the shoelaces, and they look like brand new. and Nike, since then, Nike has released a third version. And nobody liked the third version. Nobody liked the Romalos 3. So I could actually sell the shoes that I've been wearing for 10 years for more than I bought them for. Isn't that crazy? That's how much Nike quality has gone down. Yeah, you're right. I forgot that they're like on Gen 5 now. But everybody still prefers the 2s. Like the best weightlifting shoe is, in my opinion, Romalos 2. And then if you can't get those, then you're better off going to like the Adidas lines. Now, Adidas has a similar sort of a thing where it's like they kind of changed it and they don't make it the way that they did anymore, and people kind of like the way that they did. But there's a bunch of other companies that make them like the way that Adidas did. So you get one of those ones. And you can even get wooden heel. Some people like the weight and feel of the wooden heel. Which for me, since I've always used a Romalos too, would probably be really irritating to me for your foot to be that heavy. From r/recruiting hell, I figured out the secret to getting a good job in the United States. Just move overseas and you have a much better chance at working for one of their companies. Maybe. It does seem like there is a lot of outsourcing going on right now. At what point do you so here's one that I think I could see coming up in the future. Is like, okay, so if another country is producing a product using dirt cheap labor, and then that gives them a cheaper product, and so you as a domestic producer can't compete. And how do you deal with that? Maybe you put a tariff on the other country so that they can't sell that goods for so cheap. Okay. But what do you do when your workers in your country can't get jobs because all of the companies are outsourcing all of the jobs to other countries? How do you deal with that? You need to have some sort of labor tariff where if a US company is paying a citizen in another country, that there's an extra tax put on it so that that company has to pay more so that they're more incentivized to use domestic labor. Because, you know, like right now, I don't know. I kind of wonder if the whole like work from home thing is kind of worked against US workers, right? Like if it's possible for everybody to work from home, then why isn't it possible to use somebody that lives in India? And I think that one of the things that people would say is, well, like in India, maybe they're not as good. You don't get as good labor. But I don't think that that's the case anymore. Like most of the people that you're hiring here in the United States come from India anyways. I think that outsourcing it, which is to say, like, instead of developing it in-house, you contract another company in India to make it for you. That's dumb. That never works out very well. But the other company, just because they have like different incentives and the views and everything else like that, and so they just never build it right. Okay, but like going and having a division in India, that makes sense. What's to stop companies from just completely shifting over to all tech jobs go to India? And like at that point, that's like the tech sector. That's like the only people in America, tech and sales, that are actually doing well, right? If you let them outsource that, then you really don't have a middle class in the United States anymore. You mostly just need lower taxes and regulations. That's mostly why it's cheaper to produce abroad. No, I mean, there are other like regulations and things that factor into it. But especially when we're talking about like producing clothes, it's mostly that they can pay the people in another country like practically pennies. So it is essentially an arbitrage between the cost of living in two different areas. You're seeing it, by the way. By the way, you're seeing that same thing play. Like there is that arbitrage happening within the United States itself. So like one of the things that the guys at Doge are finding is that when they tell all of the government workers that you have to come into the office, there's really big problems. And why is that? Well, I can't come into the office because I live in a different state now. And so what they found happened was people got the really, really big salaries that you have to live in Washington, D.C. And then they went and they moved to Montana to live in an area that is super low cost, but they still got the big salary. And most companies, they will pay you based on where you live. Which, by the way, is part of why Utah has been able to build such a vibrant tech sector, because it's cheaper to go and build your office in Utah than it is New York. And then Democrats want to propose all of these sorts of taxes and things to stop that. but the corporations benefit from it too much, so nothing happens. You shouldn't want to produce those goods. I think you do. The thing is so again, like just strategically, okay. I don't think that robots are going to completely replace everybody, but I do think that robots are going to change productivity significantly, and that means that labor is going to be a lot cheaper. Labor is going to be a lot cheaper. Okay. The cost of labor for a good is going to go down. So things are going to get cheaper. And in that world, okay, if I want to program something, I can just have the LLM do it for me, or you know, like an average person can do it at least. And if I want to build something, I can have robots in a factory do it for me. Where does value come from? Like in that economy, who are the people that are really making money at that point? Because the cost of everything has declined. In that kind of a world, I think that the only thing that is really valuable at that point is materials. Like that's the real bottleneck at that point, right? So you have infinite labor. So the real limit on how many of a thing you can make is having enough materials, right? So having enough materials and having the actual manufacturing capacity, like actually having the factory with the robots, etc., etc., etc. Okay. So in that world, I think it's incredibly foolish to just say, oh, well, we'll let China do all the manufacturing. That's dumb. Especially if it's like the entire services economy collapses, you know, because robots do all of those jobs. What are people going to do? Like it's not just like okay, well, you can have a basic universal income, yada 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 yada, but like, what does your economy do? Because the only one that's actually doing anything, that are actually like getting rare earth minerals and pulling stuff out of the ground and manufacturing them, is China. That means that basically China controls everything. And you're just kind of living off of their generosity at that point. Right? Like, think about the issues that people have with basic universal income, basically being that it makes everybody dependent on the government. Okay, but now apply that to like the global stage. We make everybody dependent on China's generosity. Is that really the world that you want to live in? So the idea that we can just be a services economy and that we don't need to produce anything is, I think, a dumb idea. It was short-sighted. It was naive. We should never have allowed it to happen. Happened. Gonna have to go back. It's probably gonna be super, super rough trying to get the manufacturing back in the United States. But If we do it with robots, maybe we can do it. Maybe we can do it. But tariffs should be a last resort, not first, maybe. I don't know what would be like the first resort. I mean, I think that the big issue that I have once you start to get into that discussion is that I don't really see a viable way out of this hole. You know? So, like, we want to revitalize the American manufacturing sector. Okay, cool. We're going to put tariffs on to protect them. Okay, I have some issues with the way that they did the tariff and everything. Okay, but let's just, for the sake of argument, say we need the tariff to protect American companies so that people will actually build factories here in the United States. Okay, let's just give them that one. Well, if the tariffs harm the economy and create a recession, that makes it more difficult to build factories, right? Like, you kind of need low interest rates, but an economy that's still growing, right? And, well, if you have a recession, maybe you come out of that recession eventually, but that's like 2 years lost. And then if the economy is weak after that, like, you're not actually helping yourself, are you? So that's kind of part of why, like, the dollar is falling, for instance, and things like that, is because investors don't actually believe that Donald Trump is going to pull off this revitalizing the American manufacturing sector. They think that they're going to try, and there's going to be a lot of investment and so forth, but that investment probably doesn't go very far, and then eventually they shift back, right? So it is an intractable problem. I don't see a way of fixing it that I really see has a high probability of working. It may just be the case that we already basically got sold out 50 years ago and there's nothing we can do about it. Big step down offers in ZT and you got filled on it? Well, I look at that chart and I just don't see anything. And I have been watching the DOM here. I do see a lot of activity, but I just generally don't see a trade. Yeah, we're all generally screwed. Just party on while we can. This is, this is something that, okay, so like something I'm hearing a lot about is that if you are Generation X, so you're like in your late 40s, early 50s, and you're unemployed, you're like doubly screwed. And that even if you're employed, you're kind of screwed, right? Like, you have experience, companies have to pay you for the experience, and nobody wants to pay for experience right now. Companies aren't, scrambling, even when things were kind of crazy. They weren't scrambling to get employees that had a lot of experience. They don't value it. And so you kind of get this thing where, like, you're working hard, you're struggling so that you can get to a point where you can kind of relax. And then as soon as you get to that point where you can kind of relax, they pull the rug right out from underneath of you. And that's kind of part of the thing that I'm looking at is, like, I was very, very close to kind of getting all my ducks in a row so that I could just invest massive amounts of money and kind of relax a little bit. And now I kind of think like I'm screwed. Like, the possibilities for, like, the long-term impacts of this, even if I find a new job, that industry might not last for very long. There might not, maybe the software engineering industry does collapse and you just aren't able to make that much money from it anymore. and like you never recover. And like it could have pretty like just a year of unemployment can have really dramatic impacts on like your overall retirement, right? I'm very concerned about it. It's kind of something that I don't spend a whole lot of time thinking about because there's really nothing that I can do about it, and there's not really any way for me to really calculate what the actual impact is. But I know that there is an impact, you know? In other words, more and more I'm seeing a world where everybody gets screwed. Very, very few, because, you know, there's always been this thing that, like, you do all the right things and everything and you'll be successful in America and yada, yada, yada. And I'm seeing that less and less. Instead, I see a world like Dune, where corporations are climbing over each other to see who can be more brutal and heartless and screw over more people. The cyberpunk dystopia is soon. Put us all in coffins with screens in them. I should watch the cyberpunk anime again. Have you watched that? If you haven't watched the cyberpunk anime, it's actually pretty good stuff. Because not only is it pretty good as an anime, so if you're into anime at all, I wouldn't say that I'm super into anime. I've kind of been more like everybody in my world, or you know, like I'm software engineering, like they all like anime. So I've always kind of been seen it and kind of been watching it because of my proximity to that, but I'm not like a hardcore anime fan or anything like that. And in fact, I kind of hate modern anime, to be honest with you. Like especially every new anime is like some freaking isekai, which is basically like person, they had a really boring desk job and then they died, but a god gave them the opportunity to be reincarnated in a different world as this different thing, right? This is basically what isekais are. And like every anime is some stupid isekai. It's either that or they're a shonen, which is like you're in high school and there's some sort of RPG inspired leveling system that you're navigating through. Nah, I'm not really interested in a story about a high school kid. Like, to me, anime was this really mature, serious animation style that, you know, was like there was a lot of blood and violence and like just cool style, and you know, like Akira. Akira is really like the quintessential classic anime, right? That's not anime. That's not there's very few animes made today that are anything like Akira, right? But the cyberpunk anime is it is like a dystopian future serious story. It's good, and it totally gets into this a cyberpunk future where like corporations control everything and yada yada yada. So in a few more years, people will probably start referencing anime saying it shows proof of alien. Wait, where are you pulling that from? Okay, you know what's something that I think is kind of weird though, is that like a lot of Hollywood movies about, so like there will be a Hollywood movie will come out about aliens or something like that, and then later you will get supposed leaks and things like that basically mirror what happened in that Hollywood movie exactly. There's a lot of copy and paste. Well, the thing that's going to get interesting is that they are getting to the point where, like, the LLMs are good enough at, like, making animations and things like that you might be able to replace a whole... I mean, it won't be the same quality for sure, but you might start to get to a point where you will see whole animes just made by, like, 1 to 5 people. And maybe, like, they do a bit of recording of themselves in some instances, and it's coming. And then probably what you will see is a lot more, like, independent stories, which maybe aren't as good, but... That's interesting. My new squawk is saying that the British pound is falling against the dollar. Well, the dollar has been strengthening a little bit here over the last hour and a half. In that time, by the way, oil, look at oil. Like, okay, super bad down move, but what's with this cumulative delta down at the bottom? That on this pullback, the delta is super high compared to the decline? That's weird. I don't know. Oil does a lot of things that I find confusing. It's a hard thing to trade. You really gotta, like, specialize in oil. Everything is doing a lot of things we find right now. I mean, I don't really find the treasuries confusing. They're going a little bit more slowly than I would kind of prefer, but so far it's kind of all been in line with what I was expecting. Trade him, big dog. I should be. Well, I guess I wouldn't say that the treasuries are providing a ton of scalping opportunities, though. Right? Like, I like bigger picture, I think that the treasuries are doing what I expect, but this week, I think we had the one that we did. We had the one trade that we did take. And then on tariff day, I probably could have taken a trade like on a sim account, but I didn't do it because I was like, there's no way with my live account, no matter how big my live account was, that I would try and actively trade this. So I decided to not actively trade it on sim. But there was a good trade there. There was a good trade there at the beginning of the day. But only 2 really good scalps this week. So, yeah. But I do feel, based on what I've been doing with the sim trades and just my read on the treasuries overall, I do feel that if I had been live trading it, that I would be doing pretty okay. I'd be trading so small that it's, trivial amount, but I'd be doing okay. So where I kind of keep coming back to this thing that is like, I see a lot of YouTube channels where it's like, oh, I was this profitable trader and I've made so much. And when I look at what they do show, what I see is somebody that just got lucky and was able to use that little bit of luck to really promote themselves. And that I have had periods of performance that just absolutely beat the crap out of what they're showing. It was just, I wasn't trading as big as them. It really kind of grates me. Because it really grates on me because we would really like to have more success with YouTube, and the algorithm is just not like I thought. We have the best, make really good content, put a lot of content out, really try and gear that content as something that will cause people to click on it and plays into the algorithm and everything. And it just did not move the needle at all. It's somewhere along the line, the algorithm decided Seth has had enough success on his YouTube channel and we're not going to give him any more. You have your female? Well, I have the robot on. There hasn't been any kind of big imbalance today to trigger it. Maybe we should change it to be a 52. You guys want to do that next week? Is to go into the value that the backtest suggests is the most effective and go to a 52% instead of waiting for 57. It would take more trades, and that would be fun. Might actually make sense just to do that, just because the next step. Octavia says yes. The next step is kind of trying to build some of the market depth information into it a little bit more. So we can move it to 52%. Add the bit. Well, we can. We got about 40 minutes left. I don't know if that's enough time to really do it. Maybe to get started, because I want to do it like if I buy and the offer is smaller than the bid, then I will just market buy. But if the bid is smaller than the offer, then I will limit buy. That's like some logic that I want to add into it. And then probably at that point, we need to implement more of the machine learning stuff into it. That's another part. Because kind of like I see two things here. One is that's what everybody's interested in, right? How does it implement AI? So finding ways to leverage AI on all of that definitely helps. And two, it kind of seems to me that you might need AI to really be competitive. So we should probably, at least algorithmically, I think maybe you need the AI to be competitive. And that's one of the problems with why I don't really like the results of the backtests that I get, is because it needs that AI component. And then what I should probably see then is I should see backtest results that are more in line with what I would like to see, but we would have a very difficult time knowing if we're falling into a fallacy that it's overfitted, right? Because that's the pitfall that you're going to fall into with AI, is you're going to overfit your model. And since I don't have too much experience with machine learning models, I'm probably, especially not machine learning models within trading, I'm likely to overfit what we do. But that would be a step in the right direction, at least, right? And then we could potentially provide that work and make it as part of our suite. Although there's some parts, like especially if there's a part that's like a Python part, I don't know how you make like the engine part available to you without giving you the whole code, at which point it's like not really something you can sell, right? Has to be some way of separating the APIs so that you can still make your own scripts that use it or something. I don't know. I guess at the same time, I've never really used like a proprietary Python script either. Like something where like you buy it and then you can interact with it, but you don't get the code to it in Python. I've never seen that. I know you can do it with like, you can make like C++ code that is available to Python, so it's definitely doable. I should look into that sort of stuff. I don't know. I think I'm going to take a quick break, okay? I will be back in like 5 minutes. Go check on something. Okay. I had a thought. Where's that strategy analyzer? So we were going up to, where is it? Parameters. No, it's not under parameters. Where does it go? I always have a hard time finding it. Strategy parameters. Deviation trigger from -10 to 10. Let's change it to 20. Let's just see here. So I would expect it to be kind of like a sine wave. Optimization graph. And we don't want to use net profit. We want to do MFE. Ta-da. Okay. So it says that the amount it goes in favor seems to increase until you get to about 55. And then after 55, it kind of goes down. So what if we took a trade every step? You know what I mean? How should I do that? Imbalance pyramid. And the using declarations. And the instance of the indicator. Change it to inherent from our advanced base strategy. And to use its on state change. Instantiate the indicator here. Figure. And then all of this. Okay. Instead of saying deviation trigger, let's say deviation max. And deviation step. Get the directions on here correct. Starters. So I want it to say, not just when we're at the trigger, but like when it's yeah, interesting. Okay, so why do I have this if imbalance does not equal 0? Oh, because sometimes it is just like there's no value. Okay. Copy this. Okay, so if the imbalance is greater than 50 plus the deviation max, and we take this out because it should do it if it's only already in a position. Right? I think that's correct. So what it should do is it should go like long at 51, long at 52, 53, 54, 55, all the way up to 60 or whatever, and then exit all of them. And we'll set the default here to be deviation max equals 5 and deviation step equals 1. And did I close the strategy? No, I did not. Okay, where is it in here? Entries per direction. I think I can just put in here entries per direction equals deviation max divided by deviation step. Does that compile? It's not underlining that. Cannot convert type double to integer. Oh, entries per direction is an integer. Cool. Int. Okay. Cool. So now we get back to this thing. for int I equals 50. I is less than deviation max. I plus equals deviation step. If imbalance is greater than I, or it's, oh, no, that's not going to work. Int I equals 0. I is less than, yeah, okay. 50 plus I, 50 minus I. Vix is making a run. There's definitely something going on because you can see the treasuries kind of coming up here in a meaningful way. It kind of seems to me like that the market might be reacting to that headline about China reacting to Trump. So. Okay, so if it's the first one, then it's going to come in here and it's going to say, are we above 51? Yes. Are we 0? No. No. So that's good. And then it'll say, is the quantity greater than I, which in this case would be 1. And if it's not, then it will enter it. Yes, I like it. Can I make I a double? Double? I equals 1? I think so. I mean, I can definitely make it work. I'm just wondering if that's the only change I have to make. Okay, it says that's the only change I have to make. This is going to be interesting, folks. So here we don't really need to do an optimization, do we? But we do need to just go SPS strategy, imbalance pyramid. Entries per direction 5. Cool. Save history, trade size 1. Feel like we're missing something. Oh, I have the treasury in there. Okay, this is going to be very interesting to see if it actually works. Okay, it did not work. How? Why? Printing all this garbage about, oh, I can't trade. I feel like it probably ran into an error somewhere. No? I think that this is going to take a lot of trades. So it'd be very interesting to see how it comes out. But why is it not triggering ever? Print statement time. All right. Okay, it does say that it can trade sometimes. Oh, this is the opposite. Needs to be less than I. Okay. How did I screw that one up, right? So if the quantity is 0 and we're on entry 1, then that should be true. Okay. I think that was it. And this is more promising. Okay. Okay, interesting. Wait, it only 33% are profitable? I'm a little bit surprised at these results. Because it's only exiting. Okay. Oh, it's only an average, well, 3 bars a trade and for long trades and 85 bars for short trades. Okay. So we do have to come back here onto this and say, I'm gonna do this thing, but it needs to be from like when it started. And I think that the way that I do this is in my entry. Entry bar equals current bar. Yeah. Oh, actually, I don't. Yeah. I was thinking, do I need one that's long and short? But I don't. So it will get out if it gets to the 60, but it will also get out if it's been an hour since you first started. Gotcha. So what we should see is the average bars and trades should not be above 60. Okay, so how is that possible? Oh, no, that's trades per day. Average bars and trade. 1 bar? Wait. that's better. Given the time period that we're talking about, which is just to the beginning of the year, we would absolutely expect it to have made money on long trades and not made money on short trades. Interestingly enough, it takes an insane number of long trades. 7,000? For the charts. Okay, very good. 1, 2, 3, 4. One, two, three, four. Oh. Okay, so that's a problem. So this one right here, it gets to 55. It exits, and then it immediately gets back in. So that's not what we want. So I think what we actually want is cross above. And the imbalance crosses above our eye over the last bar. In that case, then when it gets to like the max one, it should, well, maybe it will be fine. But it'll only do it when it's crossing above it. So, oh, it doesn't like that, huh? Oh, and you don't use the imbalance of 0, you just say my sound to maybe get going. But let's do the back test here, see if that kind of fixes what I was seeing. So. Imbalance 1, 2. Okay, but how come it doesn't get to 3 and 4? That's kind of weird. So here it should be like, okay, 1, 2. But there should be 3, 4, 5, right? Well, 3, 4, I think it would get to max 4, right? How come it's not doing that? So it's saying cross above 53. Okay, well, I don't know what's with that, but if we look, oh, that did make it better. That actually gives me a Sharpe ratio of 0.54. It's not as good as the all in, all out. I'm actually very curious about that. One more. Ah, very good. Oh, because it didn't. Okay. Okay, so now we come back to here, and it should still say 812. Yeah. Good. And in this one, the trigger is 3. If I set the max to be 5, now it should change some things. Aha. But it's actually pretty much objectively worse in every way. It's objectively worse in every way. What if I set the max to be 10? That's interesting. It seems to me that the deviation that just, saying when it gets too much, like I get in at 52, that's fine. But like once it's to 60, that's too much, and that doesn't work. Maybe we could try pushing it the other way. Yeah, let's just do one more thing. Let's just try one more thing. If I get to an imbalance that's like we just kind of flip these around. Okay, so Donald Trump is saying that Vietnam wants to cut their tariffs down to 0, and that they had a productive conversation. I think that if he made a deal and like Vietnam's duty went to, well, even if it was 10%, but especially if it was to 0, then that would be a really big deal and would kind of say, hey, everybody can just get rid of their duties and then everything will be fine. And then the market could rally insane, right? Then it would be like, oh my gosh. Okay. If that happened, it would be like the most genius play in politics of all time. But let's see what actually happens. I don't think it's going to play out that way. In fact, I'm kind of thinking that even that maybe the best Vietnam can get is 10%. So we'll see. I guess that never happens. Let's try just below 50. Not as good. Interesting. What it's saying is, I think what it's saying is, when there is a large meta order going on, and you're getting an imbalance in favor of longs, that it is very, very rare for you to then have that flip around and start getting an imbalance in favor of shorts. And that to like flip around and exit when it does that happens so infrequently that it's only the difference of like possibly one trade is kind of a startling result to me. So I think that if we're going to do the, hey, if you get an imbalance of even 52%, there needs to be an exit of some sort. But I don't know what we can use for the exit. Oh, no, wait, I take that back. I know what we can use for the exit. Deviation max should be 0. This should just give us back the 812, right? And then I say, what is the average in terms of ticks? Oh, there's like one trade that's like super winning. Where is it? Where is it? Risk management. Use targets. Well, let's just start with 4. It does improve the percentage on this. Deviation trigger of 3. Oh, cool. It kept that. Use targets. True. Stop. 1 to 32. Increment by 1. Reward factor 1. It will not use the stops, but it will use the targets. The treasuries really came down there and bounced hard off of our line. You know what? I'm just not keyed in enough, because I should absolutely be saying, hey, look, it seems like a market headline is coming in and affecting the market and is causing all these stops in the treasuries to stop out. So we should expect them to come down to this and bounce. And they did almost exactly. I apologize. I feel like I should be calling that one out, but okay, hold on. So it seems to think that if you get like 12 to 16 ticks, that it doesn't really, like, staying in for an hour doesn't really help you. So you should just take the exit. And that helps a lot. That's actually kind of insane. Donald Trump is talking about the Federal Reserve and that they should cut interest rates now. That's funny. That's good. So it doesn't change, like, when it's working and when it's not working and all that sort of a thing, but it is pulling more out of the individual trades. And this is kind of in line with something that I've seen in my own trading, which is like, it's just really hard to get more than like 12 ticks profit. But what is the one that it actually optimized to? 14. It said 14 was the best. Come back to here. Is that's not gross profit. That is Sharpe ratio. Oh, but this Sharpe ratio was better. Why did it not pick this one? Oh, because it's profit factor. It's kind of weird, but what is the value on this one? Stop is 15. It says 15. And the one with the total, oh, it is it? No, it's going by profit factor. The max net total profit one is probably 12. Stop 14. Okay. So, based on all of that, for our experimentation next week, we'll come in here and we'll disable the strategy because it never triggered today. We will come in and we will say that we are going to use targets and make the stop be 12. Use targets and deviation trigger 3. Okay. Did I close the backtester? I did. I should. Nat, let's open it up again. I'll do one more test. I'm like way over time, but I don't hear any children yet, so I think we're okay. This optimization here. This one was 14. Okay, maybe we'll use 14. This was 14 and this was 15. I don't think it matters. Let's just use 14. So, for stop, actually, how do I want to do this? Use stops, true. This stop, we are iterating from 1 to 32. No, we'll go from 1 to 14. And for reward factor, we'll go from 0.5 to 5. 5.5. I just heard a child. Hold on. Like I hear him. He's like I hearing doors slam and things, and I'm like, that's kind of loud for a toddler. But it was the toddler with mom is what it was. That's what it was. Oh, I missed your comment, Gus. I kind of talked about that a little bit earlier. The issue I have with this thing that's like Donald Trump is just trying to wreck the economy to get lower rates is like versus he just wants to revitalize the U.S. manufacturing sector is that regardless of what his motivation is, and we can't read his mind, rates go down in either case, right? So like what is the actual prediction that we're trying to make that this idea that he's just trying to refinance the debt cheaper, like what's the trade, right? If the trade is once they refinance the debt, then he's going to take the tariffs off and really amp growth or something like that, then I don't think that trade is going to work. I think that they put that the protections stay in place for the most part. Now, this headline that's hit today, I think that the reason that the market is reacting to this is because like Donald Trump is using a stick, right? Tariff is a stick. Stick doesn't work if you don't give the person you're using the stick against a way out. You know what I mean? So, yeah. Oh, wait. That is weird. I need to run that again. Instead of on max profit factor, run it on max net profit. Because the scenario that we picked where the stop is basically, well, there are no stops, essentially. Oh, maybe it's different. Maybe introducing the stop just it cannot get to the same performance. I don't know. Powell is going to complain that Trump is pulling. Oh, you know what? I forgot. I never heard anything from Powell, but he's... Oh, no, wait. He speaks in 10 minutes. He speaks in 10 minutes. Well, I don't think that he's going to complain that Trump is bullying him, but he will reiterate the Fed's independence. I kind of think they should be cutting rates. I don't know. Like if the administration doesn't backtrack on this tariff stuff, I think you got to cut rates. I just don't see any way around it. What we've got going on right now is going to be a hit to the economy. It's probably going to be an overall net deflationary hit. And any inflation that you do see in prices, keeping interest rates where they are isn't going to help with. So you should be looking to cut. I also think that one of the problems is you only get one interest rate, but there's different sectors of the economy. And what I see is there are some sectors of the economy that are doing so poorly that they will pull the rest of the economy down with them if it's allowed to go on much longer. Like, I think these guys, like myself, that were laid off from the tech sector are just getting into the place where, you know, like they might have to start selling their houses and things like that. So I'm gonna put it at like 6 months. I think that starting 6 months, that like, if the tariff thing wasn't going on and we kept interest rates where they are, that by October we would start to see things breaking. Okay, well, using the set stops and targets, using a target seems to help, using a stop does not, which makes complete sense. Time to exit, we could do some optimization on the time to exit part, but I don't know. I'm done backtesting today. We will run it with those parameters tomorrow on Monday. And that should take more trades, and it should be interesting for us at the very least. But it seems to me like I should be able to get a better exit signal for sure. Because I kind of seem to feel like that I can see an exit, and it tends to work really well. But it's not just, you can't, it has nothing to do with the market order imbalance, right? I can just kind of see the volume start to build there a little bit, and the liquidity hole appear, and less resting liquidity there. I don't know how to express that algorithmically, man. So that's kind of tough. But I feel like that there should be something that we should be able to use from a technical perspective for an exit. Think about it. We can also test the pullback scenario too next Monday. Okay. Also, keep an eye out. You know, I didn't post this at all today, but I have done some work to create a workshop course. Have an outline created and everything. I think that this would be more appropriate for a beginning trader that wants to learn more about the financial sector, in addition to all of the things that we know on this channel, but like kind of in more detail. But I think that for a lot of you guys that are here on the stream every day, but if you know somebody that you think would want to, and I'm pricing it $1,500. So I don't know if that's realistic or what, but you know, we're just going to go with it. So if you know anybody, send them to that page. And if we get 3 people, then we'll do it. And if we don't, then we'll just cancel it and they'll get their money back, right? That's my last kind of thought on like how we can try and save the stream, because I'm concerned that, yeah. Anyways, I gotta get going. I will see you guys tomorrow.